Yeah, what's up, people? It's Jaaziah Peters once again. So today, the topic we'll be talking about is how to trade from support and resistance like the institutions do, the big banks. Now, when we talk about the big banks, these are banks that are bigger than what you have in Nigeria. I know these are like, I don't know how to, they trade in billions of dollars, not billions of naira. So, how do they trade? Now, in this market, in the forex market, you need to understand that this thing is real, is not gambling. But what we have is what we call market makers. Now, you need to understand that anywhere there is money, there is bound to be some gimmicks, there is bound to be some manipulation, there is bound to be some association around it. As simple as market women, people grinding pepper in the market. They have association, so you can just go and buy your grinding machine and say you want to start grinding pepper. They're going to fight you. You need to join the association, and there are some dues. They do that in order to protect their sphere. So as simple as selling yam, you can just buy yam and say you just want to start selling maybe in the market or by the roadside. You see people will show up, yam sellers. So that is money. Once people start making money, some people will form association around it, and there will be some cabal, some mighty minds behind it. That will be determining what happens in the market, what happens to the price of yam. If price of yam will go up, how much we'll be selling yam. It will be a general consensus, like an agreement. So that is how it is. So now the forex market, where a market where we have trillions of dollars involved, definitely there's going to be some association, some manipulation, and the likes, and it's not far-fetched. So how do these people trade? Now you need to understand that these people who are market makers, they are reading the same charts you're reading. They know the same things you know. Do you understand? So they know if you're targeting to sell from a support or from a resistance, they know. And then if you're using, they know about almost all the strategies in the market. Maybe you're using trend line break, uh, moving average break, support and resistance bounce, whatever it is you're using, order block. They know about all of these strategies. So or your trading candlesticks, double, or your trading chart patterns. They know all of this. You're looking for double bottom, morning star, morning and evening candle chart pattern, whatever it is you're looking for. They know what it is, so they can predict your action. They can predict your move. However, the forex market is the only market where you can steal money legitimately. They can steal your money legitimately, and there's nothing you can do because there's an agreement. So what do I mean by that? There are rules and regulations that we go by. So without further ado, let's jump right into it. So now, when I want to trade, now everyone has different strategies. So now what I'm going to be doing for us in this group is I'm going to be teaching you how to trade, and I'm going to be teaching you using several strategies. So I'm going to show you several strategies. Only one way doesn't lead to the market. Several roads lead to the market, and there is several ways or method to eat an elephant. So you can use your fork, you can use your knife, you can use your cutlass, you can use whatever it is. You can roast it, you can barbecue it, you can cook it, so you can fry it. So whichever way best for you. So I'm going to be showing you several ways of trading the forex market, several strategies that are profitable. I'm not saying I'm going to do that in one video, but subsequently, those are things that you should expect from me. Do you understand it? So now, but today we'll be looking at how to trade with support and resistance. Now, I'm not. I want to assume that you have some basic knowledge about trading, so I'm not going to start from defining what what the forex market is and things like that. No, I want to believe you have some basic knowledge about forex trading. So if you are a total novice, then you need to go and take some lessons. Do you understand that? So, but if you have some basic knowledge on you might not be a professional, but you have basic knowledge on what forex trading is. Support and resistance, trend line, moving average, and all the stuff. So the terms I'm using will not be strange to you. So I won't say all of that. So this is the way I trade. When I want to trade, in case you're hearing any noise, I live close to the airport, so planes land here and there every now and then. So sorry about that. So if I move to the monthly time frame, I mark every support and resistance I can find. So This is the monthly time frame now. I mark it. I don't used to do this before, but I met someone who told me how valuable these things are, because you never can tell when market will come there. But if you've marked it before it comes there, you will be able to be aware that it's getting close to the monthly resistance, even though you're trading on the lower time frame. So now this is on the monthly time frame now. I've marked all this support and resistance I can find. Then I move to the weekly time frame to adjust them accordingly, and I think we're good. So now let's go to the daily time frame. Now on the daily time frame, what do we see? So on the daily time frame, I'm just going to go ahead to add some trend lines to it. So boom. So what do you see here? Now, based on this trend line that I would draw now, what you can find is that the market has broken this trend line, so it's coming back to retest this trend line, and it's going to drop down. So, or let me say it's likely to drop down, so it's not look as if I'm predicting the market. Okie dokie. Now we move to the 5 minutes time frame, because I'm a scalper and sometimes I do day trading. So now on the 5 minutes time frame, we can put another trend line. So we can put another trend line like this. So now this is what I'm trying to say. I'm going to make this video very straightforward and short and simple. Now, when it comes to institutional trading, the way institutions know, those market makers are also watching you. So institutional trading is in such a way that they buy above, they buy, how do I state this so I don't say it the wrong way? They buy below support and they sell above resistance. So let me show you that. Let me go to the daily. Or okay, daily candle. Now this is a resistance. Now you see this resistance. This is my cursor here. Now when the candlestick breaks the support, the resistance rather, it breaks the resistance, and now it has become support for this one. Now what do you see now? This when they will sell, and they sell, and the market comes down. Do you get it now? So and the market comes down. So now they always buy above resistance. They always buy below. How will I say this? They always buy below support and they sell above resistance. So let me give you another example. Let me go to the lower time frame so you understand what I'm trying to say. Now look at this. The market is coming down. It breaks this structure line, this support. It breaks it. So most retail traders will start entering sell. So they buy below support. So that's when they will now buy and the market start going up. Do you understand it now? So now, on the other hand, if the market is going to sell, they are going to take it until it gets to the next structure line here, and they will make it break it. When it breaks it, when people start entering buy, that is when they are going to sell downwards. So until it breaks a support line or a resistance line, they don't take their trade. So you should have that at the back of your mind. And that is, so if we now go to the 5 minutes time frame, it's the same strategy all around. The same strategy. So if we go to this 5 minutes time frame now, what I've ended the teaching like that. That's what the major lesson I want to pass across. If you catch that, you've caught it. So now you might be wondering, okay, what moving average should I use? Should I use 10, 20? Use whatever works for you based on the pair you're trading. So some pairs will be bouncing off, not even pairs, like the market condition. Yes, based on the market condition. Sometimes look at this market condition now. It's bouncing off the 10 period moving average. This is 10 period moving average, and it's bouncing off it. It's just dancing around that 10 period moving average, and sometimes it will be dancing around the 20 period moving average. So just test this. When you put the 10, see how it is doing with it. Put the 20, put the 50, put the 200, so, and just see. So majorly I always like to have the 200 period moving average on my chart, so I'll know where the major support and resistance are. So now let's even look at the moving average. Look at the moving average. Look at the moving average. When it wants to buy, what do you see? It will first of all break it down before it starts going up. You see it? So if you look at this place again, it breaks this trend line. So people will, and it breaks it with a strong momentum. You see, there's no wick on this red candle. It doesn't have wick. So you will see that there's a strong sell momentum. So most people will enter sell here, and guess what? That's when the market now starts going up. So they always buy below support, and they sell above resistance. Is stated, is a known fact. So, and if you are using moving average to trade, look at the 200 period moving average. This is 200 period moving average. Now the market breaks the 200 period moving average, so most people will start entering buy, and guess what? The market now comes down. And when the market wants to go up again, what happens? It breaks this, then it starts going up. If you grab this, you'll be very profitable. If you grab this, you'll be very, as in the number of times you get faked out will be small. So now there are times that there is what we call breakouts, and those breakouts most of the time might have a retest, but it might not have a retest in little times. But what you should know that there are more fake outs than there are breakouts. Let me repeat that again. There are more fake outs than there are breakouts. So what it means is the market makers will try to fake you out 20 times, and maybe only 2 times there will be a breakout, or even once. But 20 times out of every trade, they will always want to fake you out. Like, you see a breakout, you think it's a breakout. Like, look at this here. It breaks here, a lot of people will enter sell, then the market goes back. It breaks here, a lot of people will enter sell, the market goes back. It is a continuous trend that keeps happening. So there will be more fake out than there is breakout. So only once in a while you see market breaks a structure line like this and it just keeps going. No, it will either come back to test it, or it's just a fake out. Do you understand it? So now, how will you know if it's a fake out or it's not a fake out? There's no way you can know. The only thing you can do is to take precautions and draw your trend lines and look at the second or third candlestick before you make your conclusion. So now let me give you an example. Now, if you already have it in mind that there will be a fake out, so now let's look at this. Look at from this place now. Now market is going like this, it breaks this place. So I have in mind that there will be a fake out, so I enter a sell. So now when you enter that sell, you draw your trend line like this. You draw a trend line like this. So it breaks that trend line, is the confirmation. It comes back to retest it, comes back to retest it, and do you understand it now? So that's how it is. So that will be the end of this, what I want to explain now. I just hope you get it. I just hope you grab it. So now, if you're trading from the 5 minutes time frame now, one thing again you need to know is that now every time frame has their own fake outs, but the higher the time frame, the more pips the fake out is going to be. So let me make you understand what I mean. Go to the monthly time frame now. Look at this. This is not a fake out. Let me see. Okay, let's use this. This is a fake out now. It breaks this structure line. It goes for the next month and it starts coming down. So now let's look at how many pips that is from this place now. How many pips? Like 209. If you take it to this place, like 366 pips. Do you see how much that is? So if you go to the weekly time frame and let's see a breakout on the weekly time frame. So a fake out, this is a fake out now. So now look at this. From here to this place, 169 pips before the market starts coming down here. So now let's go to the daily time frame. Now on the daily time frame, let's look at a fake out. This is a fake out now. So look at from this place now, 97 pips. Do you notice that as you're coming to the lower time frame, the pips is reducing for the fake out? So if you go to the 1 hour time frame, it's going to be reduced also. So this is another fake out. Now look at this from the point of breakout to where the fake out stop. Now we have about 5 pips. You see that? Now if you now go to the 5 minutes time frame, which is where I love to trade from, I just started that now. Whenever I want to scalp, actually, if I don't want to stay long in the market. So now if I remove this trend line now, let me delete this. Now, how will you know when the market wants to change direction? All you need to do is when you're noticing this pattern like this, is to draw a trend line. That's all. You draw a trend line like this. Why do I always change it to line? To clear away the noise so I can draw my trend line perfectly. So just touch the edges of those lines. So when it breaks the trend line, you go. Do you understand now? So you break the trend line, you can wait for a retest or you just enter like that. So now I can't remember. Okay, now I wanted to show you the number of pips in the breakout on the 5 minutes time frame. So now this is on the fake out rather. This is a fake out now. From here to this place now, we have 6 pips, highest 9 pips. So on the 5 minutes time frame, if there's a fake out, it will not be more than excuse me, it will not be more than 6 to 10 pips. If there's a fake out, tops 12 pips. Do you understand now? If it's getting beyond that, it's no longer a fake out, it has become a breakout. It's as simple as that. That's another thing you can know. So when you see the market go, let's look at this place. This is another fake out. Check it. So from this structure line to where this fake out ends, 8 pips. Do you see that? So when you see, so if you now want to enter a buy, so when I see it, when we went on the 5 minutes time frame, this candle has broken. So based on that institutional mindset, I will enter. I'll not even wait for the other block to form, for the what's it called, the bullish candle to form. Once I see a breakout, I want to assume that is a fake out. So I'll enter a sell and put it at like 10 pips, 10 pips stop loss, and boom, you see you enter profits. Do you understand now? So that is why sometimes I might take a trade and the trade ended in a loss, but my account is still secured because I'm using tight stop loss. So my stop loss is very tight and little. But somebody else might take the same signal that I send out and their account get burnt. Why? They are using high lot size that their account cannot handle. So when you take trade like this with 10 pips, 6 pips stop loss, you can lose 10 trades and you are still okay. And only one time that it works out, you're good. Do you understand? Only one win can cover all your losses. But if you're not using tight stop loss, you're trading from a higher time frame and you don't have up to 20,000. Look at this. This is not the only account I have, but look at my account balance now. What do you see here? $988. $988. So, and this is not the only account I have. If you want to know if it's a real account, look at this MT5 Real 9. Look at this place, and you can go up here, XNES MT5 Real 9. If it's a demo account, you see trial there. So I hope with this few I've been able to help you in your trading. So watch out for more of this, and tomorrow I'm going to drop a signal into this group into the group. So watch out for that signal. I might drop more than one, but I promise you I'll drop one signal into the group tomorrow. So be mindful. Always when you see any message pop up in the group, check it. All right, peace.